Good morning, my name's James Hughes, Chief Market Analyst here at Scope Markets, and this is your daily briefing on Tuesday, the 23rd of June. It was a mixed session in Asia as contradictory statements from White House advisor Peter Navarro saw futures for the US swing from negative to positive. Navarro had to clarify that the trade deal between the US and China was not over after he said in his initial comments, stating that it was very much over, were widely taken out of context. It also took a tweet from Donald Trump to calm markets as he too stated that the current trade deal was still intact. This throws yet more doubt over the state of relations between China and the US and asks questions about whether they can agree any further on any other aspects of trade. The tension between the two superpowers has escalated after China imposed a new national security law on Hong Kong earlier in June. Tuesday's session is likely to take its lead from the news out of the White House. However, the fears of a second spike in infection rates in many areas still have investors nervous. On Monday, the World Health Organization stated that a record number of infections was not just down to more testing. States in the US such as Texas, California and Florida have seen a rapid rise in infection, while Germany's infection rate also increased. The macroeconomic picture will be focused on the PMI data out of Europe and the UK and the US as investors look to see which areas of the economy are recovering. However, PMI data out of the construction, manufacturing and services sectors are all expected to post figures below 50. The figures are improving, however, and investors will want to see that improving picture highlighted in the data. Tech stocks in the US will be in focus as gains over recent weeks have led US stock markets higher. Yesterday's announcement by Apple of new operating systems for its devices also showed that an announcement that the company would no longer use Intel chips in its devices, instead opting to use its own chips. Overall, it will be a similar picture for markets today, with investors still nervous about the prospect of a second wave of infections, meaning further lockdown or the closure of businesses is a real possibility which could have a detrimental effect on markets.